Good afternoon for those who have joined us. Thank you for joining us, and for our webinar, How to Command Premium Pricing by Leading with Advisory. My name is Gary Dehart. I'm the publisher of Insightful Accountant and host of today's short 30-minute or so webinar. Our speaker is Shannon Vincent. Since 2001, Shannon has consulted with firms ranging from sole practitioners to the top 100, helping them create sustainable and profitable businesses. He is co-founder and CEO of Renew Group, which is an ROI-based methodology that transforms small to mid-sized accounting firms into highly profitable firms by leading with advisory, commanding premium pricing, and working with the right clients. Renew's numbers-based starting point and recurring accountability yields a firm with less tax season, more profits, and better clients. I can't imagine there's anyone out there who doesn't want those three things. So a couple of housekeeping items. There is no CPE for this session. If you do have questions, we would like to ask you just to have them or have you put them in the questions panel or the chat panel. And then a link to the recording will be sent to you, and it can be found on our YouTube channel. And once I'm done doing what I'm doing here, I will put that link in the chat. And then we will also have a copy of the slide deck sent to you with that follow-up as well. With that, I will turn this over to Shannon. Shannon, thank you for joining us, and I am actually going to go off camera as well.
Okay, thank you, Gary. I really appreciate you having me. Thanks so much for joining the folks on the webinar today. Appreciate you making the time. We are going to definitely rock and roll today. And as Gary said, happy to have you guys post questions in the chat panel. I'll take those. Again, calling in today from the sunny San Francisco Bay Area. Beautiful day. I'm a CPA by trade and have been consulting to the profession now for over 25 years. Same with my partner, Colin Dunn. So really the focus of today is how modern firms command premium pricing by leading with advisory. And so we're going to dig into that. And before we do, what I want to do is just sort of frame up where you are and have you think about your own firm. And you made the time and to be here today, and obviously coming out of tax season, do you ever feel overworked but underpaid and that you're often in survival mode? Do you find that you take on work for the revenue at times and that you value being busy? Do you secretly know that your expertise is more than what you're charging, but you're afraid of raising prices? And do you find that sometimes you're concerned about cash flow and debt service? So again, just wanted to get you in the mindset as we go through today's program. And really what this is about is discovering the 5 shifts. And what we find, and this is a model, and again, you're going to get a copy of these slides when we email you after today's webinar, of the sort of life cycle of a firm. And this could be a CPA firm, bookkeeping firm, or whatnot. But essentially, and I'll go through this quickly, you'll obviously have time to take a look at it and make myself available to you after the webinar. But when you go out on your own originally, you kind of, you're in your infancy, or you hang your shingle. And what you do is maybe you're trying to be all things to all people. You'll take on some bookkeeping clients, maybe just some 1040s, maybe even have a large client that you're dependent on. And essentially you're exchanging time for money. So that's infancy. And then what we do is we go to growth mode. So we sort of get to the place where we're surviving, and then we start growing. We're getting more referrals. We might be getting some leverage in technology, in people, in pricing, and we have what we'll call a service business. What ends up happening in that growth mode is oftentimes firms will get overwhelmed. And so what they do is they go, oh goodness, we need to focus on a business model. We can't be all things to all people. Consistent with that is a mindset shift. And the mindset shift is, hey, we need to make the firm the number one client. And what that mindset shift is about is, when I grew up in the profession, it was all about, hey, take care of your clients. And if you take care of your clients, profits are going to take care of themselves. Unfortunately, that's just not true, because not that our clients are bad people. It's just that our clients expect us to be capital and resource allocators to a profit, meaning we know how to run a business. And sometimes that's not easy to do. So you go through this mindset shift, and we get what we're calling the maturity phase, which is you start saying no and no now and again. You're doing some upfront pricing. The challenge is many firms have multiple business models under one roof. So what does that mean? Maybe you have a 1040 practice, you have some business and advisory clients, could have some bookkeeping. So I know many firms came out of tax season, and after focusing on 1040 business from, call it end of Feb to middle of April, then they come out of, a slumber and say, oh goodness, I got to catch up on all these business clients. So then there's another shift that takes place. And that shift is, hey, the world is one of abundance. We have more work than we know what to do with. There's plenty of opportunities coming our way. Rather than playing to survive, let's play to win. And then we get to the final phase, which is succession. And succession, to be clear, doesn't mean that you're ready to sell your firm or move on. It just means it's a firm that you and or others want. That could be internally or externally. And we'll dig into this today. And that is you're focused, you're intentional, you're getting premium pricing, you're leading with advisory, and you largely have a firm that's made up of target clients. So with that, let's go ahead and take a look at shift number one, which is making the firm the number one client. And to help me do that, I'm going to go through and chat about a CPA firm in Texas. This is Jennifer Sugarton. When we met her, she was revenue focused. She was overrun, overworked, and lacked a target client definition. And what her tax season looked like was overwhelm, chasing information, appointments, emails, calls, just brutal, right? Just trying to keep up. Service suffered a bit because she had too many clients. And she also missed her family. She has a young family. She also is an iron person. She likes to train. And when we started talking to her, she had an average price per client of below $1,000. So one metric that we all like you to think about is, what is your average client revenue? So we definitely like to talk about some of the traditional metrics in the accounting industry. We also like to introduce new metrics, which we think help you evolve your firm. So again, let's take a look at that. And you can probably do it right now. Just take net revenue divided by number of clients, number of family groups or connected clients, if you will, and see what that number is. And Jennifer's mindset was, if you take care of the client, profits will take care of themselves. She was trying to be all things to all people. Some of you may know this, where, anything that has a number on it, we're going to try to solve that problem. Revenue focused as opposed to profit focused. She had lots of 1040s that she had taken on, and she had this service provider mindset. And this is an opportunity for us at Renew to say, we don't want you to be a service provider. That doesn't mean we don't want you to provide good service. That means that we want you to have a trusted advisor relationship with those folks that you work with, meaning you dictate the terms of the client relationship. You don't let the squeaky wheels get the grease. You create value for the right stakeholders. Jennifer was also in a situation where she had purchased a practice and she had debt service and cash flow issues on her mind. So then she had a defining moment. And I think all of us need to know a defining moment is emotion equals action, meaning, oftentimes we run in our head, we need to change this or change that, or I need to call that client about scope creep, or maybe this client's not a fit. But ultimately, there's some emotion that's going to make you act, right? And so one of the things that we want you to consider is momentum. As CPAs and accountants, one of our defining characteristics is we're nice people. However, that nicety often runs into saying yes too often. So what we want you to do is develop the no muscle. We have a saying at Renew called momentum, which is a play on words of no and momentum, which is momentum. And ultimately, saying no from our perspective is a productivity hack. So start with no, then say yes, whereas most firms start with yes and then get themselves in trouble and it's too late to say no. So Jennifer's process was ultimately, as with all things, she made a decision to transform the firm. She performed a Pareto analysis. I'm going to talk about that today. She repackaged her services. So one of the things that we need to be thinking about is, are we making the intangible tangible? Are we making the intangible tangible is critically important. Obviously, with all this work coming to us, we have an opportunity to increase prices, increase value for the right clients. So it's a win-win. Jennifer, in this case, decided to sell some 1040s, let some go, and she defined target client and took action. So making the firm the number one client is a great thing to think about. And if you think you do that, you can always ask your team, hey, what are the 3 things we're doing that make the firm the number one client? What are the 3 things that don't? Or your spouse, partner, depending on the size of your team, it's a good exercise to do. And this shift just says, hey, we're going to say no to clients for just the revenue. And we're going to focus on the right stakeholders, which is you, your team, your clients, and community. And again, the nice thing about public accounting in our industry is everyone can win in that situation. So now Jennifer's in a situation where her average client revenue is over $3,200. Her target client is a client who needs year-round services in the 8 to 12K range. So we're always encourage you to push that target client number up. Her profit has doubled. She's having a lot more fun. She says no than she says more than yes. And she's, training more and spending more time with her family. So Gary, with that, I think this would be a great time to ask one of those poll questions and keep driving on here after that. All right. Thank you, Gary. So you can see folks on the call here. I'm going to put on my readers and say, let's go ahead. And it says that hosts and panelists cannot vote. So I think that means the attendees can. Do you feel like you have more opportunity to provide better service and advice to your target clients, but the squeaky wheels get the grease? So go ahead and answer that. Number 1 is don't tell my target clients. Number 2 is yes, it's hard to create capacity and have the know-how. And number 3 is no, we are serving all of our target clients extremely well. All right. Okay, let's see how we did. And 67% said no, we are receiving our target clients extremely well. It's hard to create, 33, yes, it's hard to create capacity and have the know-how. All right, good stuff. Thank you for doing that. Let's go ahead and command premium prices. So to help share that and tell that story of commanding premium prices, Seth runs a CPA firm in Arizona. Seth bought the firm from his father, who had a volume tax intensive firm. The firm was profitable, but worked way too hard for every single penny. So put another way, didn't have a lot of leverage. In our business, we get leverage in 1 of 3 places: pricing, people, technology, or all 3 or 2 of 3. And literally, Seth would spend all of tax season in front of clients, doing tax returns, chatting them up. And they actually had 1,600 clients. Can you believe that? One firm or one partner, 1,600 clients. And so here was Seth's model: a stated price of $250 an hour. I say yuck to that because we believe in pricing up front or advanced pricing. We think it's okay to track time and manage timesheets as cost allocation. But what we want you to do is price based on value and outcomes. And the reality is most partners make $100 to $150 an hour or less. So this is another metric we like you to take a look at. And let's go ahead and think about this. So take how much money you're making as a partner, assuming most of your partners, or not, it's okay to do it as well. Say, take that net number and divide it by the total number of hours you work, not just billable hours, but total number. And that's what you're working for per hour. And we believe that number should be higher in most cases. So Seth's words, where you get a fixed price, we don't like that language. We like advanced pricing or upfront pricing. The reality, he was doing tons of free work. His model was, he said he was getting paid for value, but the reality is, like many accountants, he was a pricing apologist, had a lot of scope creep issues. And as you know, when you get busy, sometimes you just focus on getting the work done as opposed to making sure you capture the value. And remember, a service in demand is always worth more than a service delivered. Put another way, you're always willing to pay more for lunch before it than after you've eaten it. So we need to be thinking about that upfront pricing. His words were proactive advisory. The reality was reactive compliance. He said he was focusing on the right clients, but often was getting stuck with the squeaky wheels. And he used to joke around and say, you know, when I went to the office, basically, I felt like I had Velcro on me and everything was stuck to me. So let's talk about Seth's defining moment and what he did to make some changes. After one tax season, his entire team came in and said they were going to quit after tax season if things did not change. So again, emotion equals action. What's that emotion that's going to get you to change? Is it that you want more profits? Is it that you want more time with your family? Is it that just tax season is crazy? So we need to be thinking about that. And again, if you need a sanity check, talk to your spouse, partner, team, or friend. And ultimately, again, we need to remind ourselves, you are not selling your time. Time cannot capture the years of experience, risk, and commitment you have to your clients. You are not selling your knowledge. You are selling the value and the outcomes of the results you deliver. That's what the right clients want. So let's use some examples. Peace of mind, control, clarity, protection from the IRS. Let's say a good clean set of books to make good financial decisions, freedom, retirement, time with my family. So we need to be using this language when we're diagnosing and pricing our clients. And ultimately, pricing and profitability are not determined by your effort, hours, or your competitors. And in the next shift, I want to talk about how you differentiate yourself. So again, we want to make the firm the #1 client. We're going to command premium prices by pricing up front and focusing on outcomes. So how did Seth do this? And he sent this email to me before we go to shift number 3, said, another client converted to monthly all-inclusive. So that's his year-round clients. And this cleanup piece is important because what I've found in my 25 plus years of consulting to the profession is lots of firms, you know, are super happy to get the client. They propose on the job, let's call it $1,500 a month, $1,000 a month. But then when they get the set of books, there's a ton of cleanup. So what we like to do is have either a phase or an onboarding price to get things cleaned up. And in this case, Seth charged $77.50 for the cleanup and $18.50 monthly. Years ago, before we started working with them, he would have given away the cleanup, not done it. You left a ton of value and money on the table and charged much too of a low monthly price. So if you struggle with scope creep, one other thing, a renew best practice we suggest is to put in your proposals, engagement letters, what the engagements do not include. So then that way, not only what they include, but what they don't include. So you can come back to that and refer to it when your clients say, hey, we need help with this. So now Seth's gone from 400 or 1,600 relationships to 425. His revenue's up 50%. He says, I set boundaries. If a prospect doesn't pass the gut check and isn't willing to pay premium prices, we pass. Put another way, if you get a prospect and all they're asking about is on the price on the front end, you're probably not the right fit. You're probably not going to get premium pricing. So our goal for you to have, again, go back to that succession phase, a firm on largely target clients where you're being proactive, where you're getting paid for your value, you're dictating your terms of client relationships. So shift number 3 is leading with advisory. So I think there's a lot of confusion around what advisory is in our industry. And so let's go ahead and start with the definition of advisory. And that is having or consisting in the power to make recommendations, but to not take action, right? So it's giving advice, but someone else has to do the lift, has to do the work. That is truly advisory. I think where accounting firms get hung up is because we provide financials or tax returns, we feel like there has to be something tangible. I'm not saying you can't do benchmarking or whatever you think is important, running some key performance indicators for those advisory clients. At the end of the day, the goal of advisory is to move the needle, transform your clients' businesses. That's what it's about. So let's talk about what we provide and what we know the marketplace wants. So we provide tax compliance. What they want is goal achievement and growth. So again, some of these things are outcomes in that need want column. They say they want accounting, but what they want is they want to trust the numbers and peace of mind. Maybe if you're providing a test work, what they really want is confidence to move forward and to reduce risk. We're providing tax speak or technical jargon. What we need is business language. Oftentimes accountants are providing CYA advice when really what clients want is they want your opinion. You know, you've got tons of experience, you're a good business person, you probably want a great firm. Give them your opinion. We provide reactive service, and we need to be a proactive, again, equals trusted advisor. So I had mentioned Pareto for profit because a lot of firms say, hey, Shannon, this sounds good, but like we're struggling to find the time to do these things. So this is a form that we work with clients on. We'll talk about if you want us to help you, you can. But essentially it's saying, let's divide our client base by annual price range. Of course, the segments can differ. This is a smaller firm, 274,000. And you can see here, we've got revenue ranges, the number of clients by revenue range, and the revenue total for each of those ranges, and then the cumulatives. So what we do is we divide your client base. We do an analysis into 3 sections. Insanity zone, which is that red zone, which are clients that drive us crazy, probably don't create a lot of profit on, but keep us busy. The green zone is what we call the leverage zone or the scalable zone. And I'm going to talk about target client definition in the next shift. And those are those clients we can bring on and not have a lot of friction. And then the yellow zone is the fragility zone. Those clients that often we get seduced by revenue, but we find in many smaller firms, the largest clients are the least profitable. And then what we do is we run a break-even analysis for you, which is essentially all your overhead, excluding labor, divided by the number of clients. In this situation, 71% of clients are 24% of revenue, right? So, and we usually find that's about in the ballpark of what it is in our industry. And so this gives you an idea like, oh my goodness, 71% of the clients are 24% of revenue. What if I got rid of some of those clients, upgraded some of those clients, maybe sold some of those clients, and focused on our leverage and scalable zone, which is that green zone. So a better model for you and your team is year-round work rather than having these intense different deadlines. I'm not going to go through this one in detail for the sake of time. It is a larger firm and you'll have it in the handouts. But let's talk about a slide here that you can actually use in front of clients, which would be, or prospects, is, hey, we're different. We're proactive and forward thinking. We price upfront, value-based. We work with a select number of target clients so we can provide you amazing service and be responsive and create value for you. We communicate using, business language. The other one, and this is a key one, is our firms that we work with are starting their relationships now. I know so many firms that, work like mad in the fall to get all their engagement letters out. They're already busy trying to do tax planning. Plus you have the holidays, and then they go into tax season. They generate 65% of their revenue, but it's a transactional relationship. And we all know if we're doing tax returns and trying to do tax planning when we're doing the return during tax season, it's too late. So we're going to talk about how we can start the relationship now, and the relationship, quote unquote, ends with the tax return. And ultimately, again, you're going to have momentum, not be all things to all people. So how do you lead with advisory? Again, you're going to have this handout, but here's an example. We're going to do it. This is just a quarterly example. You can do this on the individual side. You can do this on the business side. advisory and consultation year-round, proactive tax, accounting, and business advice, tax strategy, so quarterly check-in and strategy discussions, tax planning, obviously estimates are due tomorrow. You're probably working on some estimates for some of your clients. You do a quarterly financial review. You can obviously review year-end financials in the first quarter. You can do representation resolution and then tax compliance. So just imagine showing this to a prospect with a grid throughout the year versus what you're doing today and how this is really leading with advisory. So of course, to do this, you need the right clients. And so let's talk about a target client focus. I'm going to go ahead and, as we go through this, just give you some things to really be thinking about. So the first thing is you do need a target client definition. One of the biggest mistakes we see firms make is they're actually not sharing this internally and they're not sharing it with referral sources. So when they get a referral, they're afraid to turn down a referral source because they want the referrals to keep coming. But one way to minimize the wrong referrals is actually to tell your referral sources, this is who we're focused on getting, and this is what we do best. So what is a target client definition? An example, they're profitable, they obtain leverage, can get scale, and we can find more of them. Again, back to that green zone. Closely held owner-operated businesses that do at least 500K in revenue or 150K in profit. Again, you need to make that your own, so you have to fill in your own numbers. Wants a full service year-round relationship, positive, willing to listen, will work with our systems and processes, and recognizes we'll pay for the value we create. So what's some target selection criteria we can talk about? Client's core values aligns with ours. The client values the services that we provide. We're dictating the terms and we can scale the client. Client is willing to work with and respects your team. So if you're at the team, again, you can get people leverage. This client requires not a lot of partner time and input. The firm achieves target profitability on the client, and the client doesn't create firm and partner stress. So here's our 3 zinger questions, renew business model questions, if you will, is every prospect you get, you say, does this opportunity meet our business model? Again, go back to where are you in your business model phasing? It assumes you have a business model. Where are we getting leverage, price, technology, or people? And ultimately, what does it require of me? Because I know lots of firms that have partners that go out and sell work. They get back to the office or get off the phone and they think, oh goodness, now I have to do the work. And the bonus question, of course, is your team going to be happy you brought this client on? So what's some target client low-hanging fruit before we just go a couple more minutes here and call it a wrap with a final polling question is, define your target client using the example you're going to get that we just provided. Share in writing with your team your key referral sources what that target client definition is. Identify where you can find more of those client relationships by partnering with other business-to-business relationships. This could be associations, bankers, business-to-business relationships, lawyers, software providers. Association example is, we have a firm that focuses on veterinarian. Go join the veterinarian association, and then ultimately develop a plan of attack. So shift number 5 is just act now. Again, that emotion equals action. Make the firm the number 1 client by focusing on the things that create value for you, that you're profitable on clients, and you'll actually create more value for the right clients. Command premium pricing by pricing up front, focusing on outcomes and results. Lead with advisory using that grid. Don't start and begin with compliance. Go ahead and start the relationship now by leading with advisory. Target client focus, again, getting focused on where are you scalable, where can you get more of those, and establishing those relationships. So Gary, with that, I will let you launch the polling question. I'll also just put a link in the chat panel. So if anyone wants to schedule a half an hour meeting with me, I hope I didn't mess that up. they certainly can. And you can go to our website here, w.com, in the chat panel, and there's a place to share some time. Just gonna try to grab this link here. If anyone has any questions, feel free to put them in the chat panel. Seems like everyone's still with us that was here, which is great. You can also click on that link to apply. All right.
So Shannon, just while you do that, let me throw a question out there, and that is, you know, the market has taught advisory services for many years now, and I haven't seen any stats on the uptake of advisory versus sticking with the norm, but you know, it seems like sticking with the norm is still the norm, right? And that and going down this advisory road is not the norm. Do you agree with that statement? And if so, what do you think is the primary driver for advisory not really picking up? Because I know as a small business owner, what I need is advisory services. And I'm willing.
Yeah, Gary. Yeah, that's a great question. So I would say, yeah, of course, there's been a ton of conversation about advisory, and I would say there are definitely, you know, pockets of firms that are doing it. And I would say that, and I want to make sure I answer your question, I think firms have to create capacity, right? Because if you're running from deadline to deadline to deadline, it's really hard to be proactive, because one of the definitions, right, of advisory is being proactive. And that's why, you know, we at Renew really incorporate this Pareto analysis and bet ourselves in the numbers. Like, let's make decisions around the numbers in your firm and create capacity. I mean, that's got to be step one, because without capacity, you know, the firms are just running from deadline to deadline.
Makes sense. I'm in the middle of that myself, because you know, I wear a lot of hats here, and I was out of town last week, and pretty much I'm going to be out for the next 2 weeks. 1 week working, 1 week on vacation, and there's just a lot that has to get done. Still has to get done, right? It has to get done before, but it has to get done even, you know, while I'm gone. And capacity would certainly solve a lot of that for me. So.
Sure, and it's changing the model. It's like I showed that slide, right? It's like what I'll just go back up since we're just having an informal chat, which I love. So thank you for the question. But it's like, you know, really asking the firms, where are they, right? Like, are they in infancy, growth, maturing, or are they in that succession phase, right? Because I mean, we, you know, admittedly work with lots of firms that, again, have a big 10, they still are hanging on to a bunch of 1040s, and then they're ignoring their target clients. And so they get out of tax season, you know, they're tired, and it's like, you know, I got to go talk to my target clients. It's like, well, why don't you talk to them all year round? Let's expand the way we're serving them, and frankly, just reduce the number of what we call standalone 1040s.
Got it. That makes a lot of sense to me. And I love the whack-a-mole. I'm in the middle of whack-a-mole right now, and I'm going to try to get out of whack-a-mole. So Shannon, thank you for sharing your experience and your wisdom with us today. And like we said, we will send you the link to the recording of this, and which will also have a link to the slide deck, which is going to be sitting in a box folder. So both of those will come to you within about 24 hours or so. And Shannon, you did include the website, did you include an email? You might want to throw that out there too, just in case somebody wants to email you after this.
Sure, absolutely. And happy to get emails, and svinson@renewgroup.com. And then, yeah, you can schedule a call with me, send me an email, and, you know, we'll make sure everyone gets the handout. So yeah, thank you, Gary, for having me. And thanks everyone for attending. And yeah, the motion equals action. Now's the time.
There we go. I like that. And then just from the audience standpoint, if anybody has, you know, if there's topics that you would like to see us cover on sessions like this, you know, please, you know, respond, either put it down in the chat, although we're about to close this out. But in the email that we send to you with the follow-up links, just reply back saying, hey, I'd love to see more on X, whatever X may be for you. And that way we can then go out and try to find speakers that can talk to those particular topics. So Shannon, again, thank you. Everyone who did join us, thank you for taking some time out of your day. And I hope you all have a wonderful week and a fantastic summer. Thank you.
Awesome.